Today, I'd like to talk about the big asset managers moving their money around the world. We're getting more and more information every single day. So, our contention is to don't pay attention to this back and forth on the tariffs. It doesn't matter. As of Liberation Day, people are moving out in the sense that they're reallocating how their portfolios are designed on a global basis. And most of it will be over the next, I think, 5 years. It'll be people will be selling our assets, stocks, bonds, everything, property, everything, as they reallocate out of the United States. So whether that's going to be 10, 20, 30, 40, 50%, I have no idea, but it's going to happen. And of course, our biggest concern is if they don't buy our treasuries, okay? So the first thing, our treasury holdings are actually up from about 8.5 trillion to 8.8 trillion. The video that we did the other day, we said it was around 7.25 trillion. But here you go, foreigners own around almost 30 trillion of our assets. And remember, this is June of 2024. Look at our equities. They were up basically 3.2 trillion. Remember last year, 74 cents of every dollar invested in the entire world. Everybody investing was invested in America. I don't think that's going to happen this year. You can see the long-term debt and our asset-backed. These are our government-backed mortgages. And then they have others. So total of $31.28 trillion. So we can remember that, all right? And match this against what we see when the numbers come out again. So here's this gentleman. I'm not saying anything. I'm just, whether he's good, bad, or indifferent, I don't know. I do follow him, though. And I would just go to the second paragraph here. The Fed still controls the front end. Remember, we always said, Fed controls the short end. The long end is controlled by the market. And the long end is slipping off the leash. And here's the important part. They are caught in a crossfire, global rotation out of duration and into hard assets. So they're selling our long bond and they're buying hard assets. And FX hedges and real yield proxies like gold and the Swiss franc. What did we say before? What did we watch? We watched gold, the Swiss franc, and now we have this other proxy. I don't know how it's going to work out with Bitcoin. I'm not a fan, but it didn't go down this time, so I give her kudos for that, all right? So he's looking for the 30-year to break out above 5%. So here's the foreigners. They say they brought out $3 billion in corporate bond funds just last week, okay? But they own $4.4 trillion, or 27% of the corporate bond market. So again, it's going to take between 3 and 5 years. Here's our long-short ratio. Basically, we're dropping down to the bottom here. So people are more short than they're long than the United States. Now, Bridgewater is talking about this issue right now. They're saying that the new macroeconomic and geopolitical paradigm is turning past tailwinds into headwinds. Remember when I said we're the reserve currency gives us unbelievable unearned wealth. And, well, right now it seems that we're trying our best to get rid of that. And it's reshaping the global flows of capital. This is what I'm talking about. The global flows of capital by the big money. It's flowing away from us, all right? And so he says, this is a once in a generation. And frankly, this hasn't happened since World War II. So China has rolled out its own currency payment system. 16 currencies are in there. And I saw someone claim they did more transaction one day than SWIFT did one day. I find that hard to believe, but we'll talk about that later because we'll do a video on the CIPC. But what I'd like to say here is this. Remember, we're in the first or second year, 15 to 20 year transition. And during this transition, there's going to have to become a moment that China's going to have to make up their mind. If they decide, like on this payment system, that they're actually going to start letting their currency trade freely in the world, the first thing that's going to happen, it's going to race up, okay? Kind of like the dollar, and it's going to go up. And being an export nation, they don't want that to happen. But the way things are going right now, I think in our lifetime, the next 15 years, we're going to see China open up and go live, okay? So that's just my opinion. Now, last week in our video, we stated that the New York Federal Reserve said that basically all the countries are asking for their gold back. And here, China, they're so sharp. I got to give them credit. They're opening up overseas offices for their gold exchange, so people can drop their gold with them and not keep it with the United States and still be able to use it in their business. Now, listen, there's a lot of stuff going on. And these are all data points. These are not saying this is going to happen, okay? These are data points. We have a narrative. The narrative is that big money is going to reallocate their portfolios. And when they do this reallocation, it will be away from the United States. So you watch several things. Are they moving? And you can see that they are moving, but not great yet, okay? And then the second thing is are there facilities being set up around the world, right, to allow the countries to store and trade in different currencies and in their gold that's away from the United States? And the answer is yes, okay? Now, my opinion, if go back and watch me for the last 3 years, is, I saw this totally different, that I believe the world's changing. I believe that Canada, America, and Mexico together would have been the greatest economic unit in the world, and it still could be. Right now, I would say they're a little, mad at us, and we're not helping ourselves a lot, but that would have been the way to go. So as the money moves and it goes places, and you can see it's going to the euro, it's going to the yen, it's going to the Swiss franc, and it's really going to gold, because China, Japan, and Europe all have issues just like America does. Our issue is more immediate because we're the first country that they're leaving, okay? They're saying, okay, I need to cut my risk profile inside the United States. Period. End of story. Doesn't matter if any politicians here, doesn't matter. They're cutting their exposure. They were overexposed in America because we were, quote unquote, the safe haven, where the rule of law was. And right now, it's not perceived that we have the rule of law or that we're a safe haven. So, when you're thinking about your decisions on where you're going to invest where the big money is investing. So as anyone who follows their channel, we were like, buy the yen, okay? We weren't a fan of the euro, but I didn't think that we would do what we did. So, again, it's the failure of imagination that you miss a trade, right? That was my failure of imagination. I thought Europe had way bigger issues than America did, but we managed to say, no, we're a bigger issue than Europe is. But this should also kind of like move back and forth as people figure out what to do, all right? China, though, is the long-term wild card. Are they going to open up? And if they open up, then given where the renminbi is today, I would say the renminbi could be a very good long-term investment, because China has to make like the biggest decision. Literally, it would be like the Bretton Woods decision for the United States and the world in 1945, okay? So if that happens, then the renminbi will be, I think, screaming up. And China wouldn't want that, but that's what would happen. So what do you think? What's the best way to invest in this? Tell me in the comments, and like and follow.